Let's consider the following terminologies that are being used in the stock markets, starting from insider. Insider is someone who has access to the confidential information of the company. Insider could be someone or a person who have complete access or knowledge to the confidential information about the company. It could be the employee of a company. It could be an accountant. It could be a lawyer of the company. It could be a director of the company. It could even be a government entity or a trust. Anybody that is having access to the vital information of the company is regarded as insider. What then do we call insider trading? Insider trading is sometimes called insider dealing. Insider trading or insider dealing is illegal practice of buying and selling of company shares or bond based on non-public material information. Insider trading is a situation whereby the employee of a company take advantage of the information which he has access to and trade the shares of the company to his own advantage. Okay, let me use a particular example. An employee in a pharmaceutical company, for example, is aware that the company has carried out a clinical trial which has resulted to a positive information concerning the company, but the information is not yet made to the public. But the employee, having got the access to the information, decide to buy the shares of that very company that is listed in the Nigeria stock market with the anticipation that the price of that share will rise in the nearest future. Do not forget, there are several factors that can drive the share price of a company, and one of them is information, a tradable information. If you heard information earlier for one particular company, you may decide to buy the shares of that company, especially if it is a positive information concerning the company. Then you may decide to buy the shares of that company with the hope that the share price will rise. So an employee, for example, now of a pharmaceutical company who has gotten access to the successful experiment that has been done in the pharmaceutical firm, decide to buy the shares of that company with the anticipation that the price of that share will rise. What that person have done is what is called insider trading or insider dealing, which is punishable under the law. Or it could also be like this. Maybe an employee of a company is aware that a company is about to acquire another company. That's a positive market sentiment also. Maybe just like what happened last year when Orlando acquired Ajib oil company, the share of Orlando's company began the rally, moving from as low as 30 naira up to 100 naira within the space of 3 to 4 months. Acquisition is another factor that could drive the shares of a company. So if an employee of a company is aware that the acquisition is about to take place, then he could use the information to trade the shares of that company to his own advantage. Just like a few days ago, when there was this information that Tantalizer has acquired another media house in Nigeria. What happened to the share of Tantalizer? The price of the share was around 2 naira 30 kobo, 2 naira 35 kobo. But immediately that information was released in the Nigeria Exchange Group website, the share began to rally. The share price began to rally. It moved from that 2 naira 35 kobo down to 2 naira 53 kobo. As at the time of shooting this video, the share price of Tantalizer is around 2 naira 78 kobo. Positive market sentiment. driving the shares of a company because of just that good news. Acquisition of media house by Tantalizer. They are trying to diversify the scope of their operation. So the share price begin to rally. So there are several factors that can actually drive the share price in a company. So we have been able to explain what is called insider. What then do we call free floats? Let me just use a calculation to explain what is called a free float. Let's assume that one particular company that is listed in Nigeria stock market has, let's say, 10,000 units of the shares. Out of this 10,000 units of the share, maybe the company decided to keep 4,000 units. They keep 4,000 units. That 4,000 units now belong to the insider, like the employee, like the director, the larger stakeholders. They are the one that is keeping the 4,000 units. They now make the remaining 6,000 units. They make it available for general public for buying and selling. So part of the shares of a company that is made available on the Nigeria Stock Exchange for buying and selling on a daily basis is what we call free floats. Let me take it again. The total number of shares belonging to one particular company is 10,000 units. But the insider, which could be the employee of a company, it could be the lawyer of a company, it could be the director of a company, the accountant of the company, they decided to own 4,000 units, which is not bad. They released the remaining 6,000 units into the stock market for the public to buy and sell for trading purpose. So this 6,000 units they release is what we call the free float. So which means free float simply means the total number of outstanding shares of a company that are being made available in the secondary market for the purpose of trading. That's what we call free floats. And one thing you should not forget is this: the larger the free float of the shares in the Nigeria stock market, the higher the level of liquidity of that company in the NGX. What am I saying? If you have enough shares in the NGX, in the circulation, in the trading for the trading purpose, then definitely such a stock is said to be liquid. But if what you have is very small, then that stock is not liquid. That is why when you are subscribing to the shares of any company, you have to also consider what is called the free float. The level of liquidity is also matters. So that when you are selling the shares, or when you are selling the share, it will be easy. A stock that you are buying, a share that you are buying must be highly liquid. And again, if the free float is also large, it also means that such shares or stock, the level of volatility will be at minimal level. We know that generally the price of stock is subject to volatility, but a company with higher free floats in circulation tend to experience a lower level of volatility compared with a company with a lower free float shares in the circulation. I will explain what is called free float. What then do we call price to earning ratio? We use price to earning ratio to determine if a stock is undervalued or overvalued. And when you say a stock is undervalued, an undervalued stock is, we can even use Senate Bank as a good example of an undervalued stock. Currently, the Senate Bank is trading around 48 naira in the Nigeria Exchange Group. But when you look at the face value of Senate shares, it could be as high as, that's the potential upside. The potential upside of UBA share, of a Senate Bank share, could be around 90 naira upward, because their PE ratio very, very low. I think the PE ratio is around maybe 1.9x. This is a low PE ratio. So when the PE ratio is very low, it means the stock is an undervalued stock. And when the PE ratio is very high, it means the stock is an overvalued stock. This is another parameter that an investor or a shareholder must consider before subscribing to shares of any company, because some shares of a company are overvalued. So you don't buy the shares of a company that is overvalued, but you buy the shares of a company that is undervalued. So we use the PE ratio to determine if the stock is overvalued or undervalued. Now we have what is called all share index. Every country gets their own all share index. In case of Nigeria, we call it NGX all share index. NGX all share index. In the New York, you have Nasdaq all share index. But in Nigeria here, we have NGX all share index. This all share index tend to track the performances of all the company that is listed in the Nigeria stock market. And of course, we have about 144 company currently listed in the Nigeria stock market. So if we want to track the performances of all the company that is listed in the Nigeria stock market, we use what is called all share index. And this all share index now is also broken down into different sector. That's why in the NGX also you can see an NGX banking index. This one will measure the performances of the banking sector that is listed in the NGX. You have oil and gas index, you have consumer good index. So we have the different set of indexes. We even have NGX 30 as well. But now we are only talking about all share index. Like I said, it tends to track the performances of all the company that is listed in the Nigeria stock market. And of course, today, all share index even close above the key level. It closed around 109, I think 109.890 basis points. And when the all share index is closing around this region or settles around this region, it means the Nigeria stock market is already on a bull run. But anything that make all share index to fall below 105, we say that all share index is closing below the key region. That means it's returning to a bearish period, which is not really good for the all share index. I mean, for Nigeria stock market. What then do we call ETF? ETF means exchange traded fund. What is the best way to explain exchange traded fund? For example, I may need to buy shares of maybe UBA, FCMB, maybe NASCOM, maybe Dangote Sugar or Dangote Cement, or maybe I want to buy Veritas Capital, or I still need to buy maybe Wima Bank. I may not be able to buy all this one. Or if I wish to buy all this one, but I don't have money to buy all this, I may consider the ETF. Because by buying the ETF, for example, now, it seems that I've already bought up to 10 or more than 10 companies that is listed in the Nigeria stock market. What do I mean by say ETF again? We have in the Nigeria stock market, we have what we call what is called an NGX 30. We have what is called VET Bank. These are the type of ETF that we have. If you buy VET Bank ETF, it means you have bought into 10 banking shares in the Nigeria stock market. If you buy NGX 30, it means you have bought into 30 most capitalized stock or shares in the Nigeria stock market. So ETF is like someone who wanted to eat fruit, you want to eat fruit, you plan to eat banana. At the same time, you also wish to maybe buy orange, or you want to buy maybe watermelon. Instead of you to buy all of them one by one, why don't you consider fruit salad? Because by buying fruit salad now, you are going to have access to different set of fruit inside the same basket. So that is what we call ETF. It's a combination of companies, combination of shares of a company into one. We call it ETF. It's one of the products that is also listed in the Nigeria stock market, because in the Nigeria stock market, we are not only dealing with shares, because shares is the most common thing that people know. There are other investments that can be traded on the floor of the Nigeria stock market. Apart from share, you can trade your ETF, you can trade your FJ savings bond. Any type of bond at all can be traded in the secondary market as well. So for now, let's call it a day. Thank you.